What a ludicrous week. I mean, ludicrous. Watching everybody spin their heads around this complete sea change. But it's clear that they're scared of Donald Trump. It was as simple as that. And before you know it, the hand was waved and everything happened. And then everybody's been scrambling to catch up with what the hell this even means. Now, the bill, we don't know what final format and what it's actually going to mean and, how good it is, but it's just showing that we can move forwards, or the US can move forwards, and none of us live in the US, but it's a big deal. And the ETH ETF, what is interesting to me, we all knew it was going to happen, but now it's happened. I'm really interested to see what narrative BlackRock put around it. What is the narrative of ETH? Because ETH kind of lost its narrative in this cycle for those of us who've been around. We kind of know what it is, but it wasn't winning the narrative game. But they're going to reframe all of this for the public. And it can't be, it's another cryptocurrency, because that's not going to sell.
Yeah.
Because people say, we've got Bitcoin. So they're going to have to sell a vision for this thing.
In a move that not even the best analysts in the crypto space saw coming, last week we saw the approval of the Ethereum ETFs, and Raoul Pal thinks it's going to be BlackRock and the biggest financial institutions in the world who are going to potentially push Ethereum as high as $20,000 per ETH by the end of this cycle. To break down last week, in a nutshell, the reason we saw the Ethereum ETFs get approved out of the blue is because of Donald Trump. Trump, over the last week, has become very vocally supportive of Bitcoin and the crypto space, even now accepting campaign donations in crypto. This forced the Democrats to rethink their hostile approach to crypto, and thus we saw a 180 by the SEC and the approval of the Ethereum ETFs. This is massive for the entire crypto space, as it is now clear that the US is going to be crypto-friendly moving forward. In his latest livestream, Raoul breaks down why it's now going to be BlackRock who spins up a narrative surrounding Ethereum which will send it to new highs. Just how high? Well, stick around to the end of the video, where in their latest video update to investors, macroeconomist Julian Biddle from Global Macro Investor alongside Raoul Pal break down their work which suggests we could see Ethereum soar as high as $20,000 per ETH by the end of 2025. If you want to check out the full deep dive, check out the first link in the description and be sure to subscribe to Raoul Pal's The Journeyman channel. But without further ado, here's Raoul on what the Ethereum ETF means for markets.
Look, all of us who've been in the financial system know that every single bank and asset management firm is working on this. I mean, Goldman's had a team since 2015. So what they wanted was the regulatory clarity, which is what Fink has forced through.
Yeah.
So the explosion of innovation that's about to happen from the finance system itself, I think, is the shock. It's not going to come from NFTs and all of the stuff that we all do. It's going to come straight from the heart of the financial system. And before you know it, they're tokenizing everything, as Larry said, and they've all been desperate for this. Wall Street will have lobbied for this because it saves so much money. It's like, I keep explaining a story to everybody that I think is super valuable for people to understand. Because a friend of mine was running fixed income, currencies, commodities, and treasury at National Australia Bank. And he's just retired. And I'm like, well, what have you been up to last few years? He goes, I've been building stable coins. I'm like, why? He goes, yeah, in euros, in Aussie dollar stable coins, euro Aussie, euro US, euro whatever, Canadian, UK. I'm like, why? He's like, nobody realizes. I think it's next week. Fucking US goes T+1 equity settlement.
Wow.
FX markets are T+2.
Yeah.
Australia is T+3 because of the time zone. He's like, we're going to have to give tens of billions of dollars to our brokers to settle trades. And that takes from our regulatory capital, and they'll offer us zero interest rates on it. So we're forced to use stable coins. I'm like, oh, of course. That's a massive use case. I think Canada goes to T+1, and I think, I don't know, the UK and Europe are as well. So that's a big deal. Somebody said, good luck, Elizabeth Warren, in building an anti-crypto army. You're going up against millions of people who are motivated by their own future, the financial future, and they understand the power of means. Like, that is very difficult to go up against.
Yeah.
And Trump saw that. And I think the Democrats are learning very fast that, there's 110 million Coinbase accounts, of which I don't know what's active now. Call it 10, 15 million are active, but in the height of the bull market by next year, be 40 million plus. You are not going to piss off those people and tell them they can't have a financial future and win an election. Zero chance. We'll take it and we'll be the global center. And they're fumbling the ball because they're arguing about politics.
Yeah, that's it, 100%. Like, this is a massive opportunity there, and I think it's being missed. Hopefully Labour, who looks likely to win the election, come in and realize that as well, because to me it just seems like a massively missed trick. Like, this is built for the City of London. This is built for all the hedge funds, all the asset managers, all the wealth that's in London is all around financial services. So why they're not at the front of this just seems madness to me.
I've got a quick question for Raoul before he has to shoot off, but we just spoke about all this bullishness of ETH and the ETFs and TradFi and BlackRock and Larry, etc. Why do you think ETH is still at 3,700 right now and not at like 5K or even 4K or even higher?
I saw your tweets on this and it made me think about it. We are all fully invested in the space. So the only capital is rotating from Bitcoin or Sol into ETH. We've seen a bit of that. I think that will continue. By pure luck, I've been following the ETH Bitcoin cross for a while, and we got these new kind of trade idea templates on the Real Vision platform. They're just in beta test right now. And I tested one out on Saturday and put my whole thesis about the ETH Bitcoin cross, and it's exploded higher. So, that was pure luck. But I think that there's no new capital coming into the space right now. Now, if we think of it in terms of broader macro picture, the business cycle is only just picking up. Earnings are just picking up for companies. So we're not flush with cash in the real economy. Yes, some stocks have gone up and crypto's gone up, but not all crypto either, as we know. There's been quite a decent amount of divergence as there is over the crypto spring. So it is going to have to come from the ETF. And then it'll be all-time highs is going to be the driver. In fact, all you need actually is Bitcoin to hit all-time highs, then Sol will go, ETH will go. I think that brings NFTs alive, it brings alt season, it recycles capital, it brings those 80 million dead Coinbase accounts back into activity. That whole great cycle that happens in crypto summer and crypto autumn is yet to play out. I mean, don't forget, we're still basically in the middle of the pandemic when we go back to the last cycle. We're not quite, we hadn't really started anything yet. Bitcoin was just breaking 10,000 after having consolidated. So I think the most overused phrase in crypto is we're so early, but we're early in the cycle. So we just need fresh capital. Liquidity, there was a liquidity withdrawal I think we talked about it last week because of the tax stuff. We'll see liquidity starting to come back in. Yellen should normally inject about 250 billion of liquidity. Now she's had the tax receipts in. Before you know it, now there's less QT, liquidity comes in, it all starts happening. So patience, I think, is the answer.
So we think that this brings the entire space above 10 trillion this cycle. And the everything code, just to kind of wrap things up, is why you see charts like this. They don't need to play out perfectly, but prior cycles are repeats of current cycles just because of this debt maturity schedule and the rolling of the debt refi cycle. And so, I think, we could hit 20,000 on Ethereum this cycle and into the peak in 2025. Let's see, right? But what I also
not forecast so much as it's possible just based on repeats. Now, it may be different. Doesn't mean that. We're not saying Raoul and Julian banner headline, think ETH goes to 20,000. We're saying, listen, just understand how this could play out here.
Yeah, and I think that's an important point because I think most people are still scarred from the previous cycle. I mean, there's different probabilities of how this cycle plays out, and we'll figure it out by the time we get to fall. It could be a blow-off top cycle where things go a lot further than people expect. Don't forget, this is the first time we've ever had institutional buying. And there's also, the probability that this could become a truncated cycle like we had the last cycle, although we tie a slightly lower probability to that. But nevertheless, this is a chart I wanted to show you. And then the last two charts on ETH, and then I'm wrapping up. I think I said that like 5 times now already. Is that these 5 wave down cycles that we've seen, and I show it to you here on ETH just because I'm following up with the chart that I showed you previously. They're visible everywhere in crypto. So you get a huge pump higher, a sell-off, a wave 2 higher, a wave 3 lower, a wave 4 higher, and then a final dump lower into, full, let's say, capitulation. And then prices move higher again. And I see these time and time again. In fact, you can see it here over a different time horizon. And so I think that in our view, this was the pause, the halving, the correction that we've seen, the 20% drawdown in Bitcoin, more for altcoins. This was the pause that refreshes. The economy is still on track, right? Next up is rate cuts. The global rate cutting cycle is already happening, which is Raoul's going to show you now. And so this leads to an environment where we feel bullish out into mid 2025.
You've heard me talk about the supermassive black hole, the crypto black hole. You've seen everything that we do to reach the kind of conclusions that we do. And now I'm going to come to the conclusion. The conclusion is straightforward. We're dealing with the technology adoption. It's the fastest pace of adoption of any technology that's investable. AI is not investable right now. And it's been growing at twice the speed of the internet. If we assume that it grows at the speed of the internet, which would be probably a false assumption, it should grow faster, for the rest of this year or so, we get to the end of 25 with 1.1 billion active wallets. Active wallets are not actual users because people have multiple wallets, much like people have multiple IP addresses, which is what this is showing too. We're comparing it to IP addresses. So we get to 1 billion wallets. That's a huge number, and that drives the adoption of the space based on Metcalfe's law and the valuation. Then if we extrapolate out into the future, I keep saying this space is going, this is the biggest macro opportunity we have ever been given. It's been the best macro performing asset of all time. It's the best risk-adjusted reward of any asset in all history. It's an alien asset class. And that trend of $2.5 trillion today to 10 to 15 trillion this cycle to 100 trillion by about 2030, 2032 is driven by this adoption curve. That's when you get to 4 billion active wallets by the end of 2030. That's a mega trend. That's all you need to know. 2.5 trillion, 10 to 15 trillion, 100 trillion. You're trying to capture that. You're trying not to fuck this up because this is the gift you've all been given, and everybody can put 10% of their wages in or whatever it may be because it's a democratized, fractionalized asset that's globally homogenous. Everybody in the world invests in the same product. Bitcoin is the same in Nigeria as it is in Brazil, as it is in the Cayman Islands. That is the gift to humanity. We get to invest in the infrastructure layer, the network layer of this incredible new technology. And on top, they'll build the applications layer, which will be the new Googles and Facebooks of this Web3 world. So that's what's driving this trend. The debasement of currency plus the ridiculous adoption of this technology, which is only growing. You hear every institution now saying, well, we want to build real world assets on Bitcoin rails. The exchanges are going to build on it. The corporations are going to build on it. You know, we're already seeing so many people building on top of these rails because it's just a better system. Then we've got digital ID layer. We've got the stable coins layer. We've got so many things being built. That's going to keep driving this logarithmic chart, which gets us to, at the end of this cycle, we don't know, but, Bitcoin, according to our work, could get to 400,000, could even go higher than that. Sure, it could be truncated too, but it doesn't matter because the trend goes longer. And your game is to stay in the trend. Even if you take some lifestyle chips off, let's say at the end of this year, just so you take economic pressure off yourself, it allows you to continue to participate in this trend. Because if you don't, you try and get cute and try and time it, you'll fuck this thing up. My job here is trying to unfuck your future. So you can understand where I get these little memetics from. How to unfuck your future. You're being debased upon. Here is your answer.
So there's Raoul Pal and Julian Biddle on the unexpected approval of the Ethereum ETFs last week, which marks a massive milestone for the entire crypto space. As Raoul highlighted it, the influence of BlackRock and other major financial institutions could potentially drive Ethereum to new heights, with the Everything Code suggesting it could possibly reach $20,000 per ETH by the end of this cycle. I don't think any crypto investors would be disappointed with that. For a deeper dive into their insights, check out the first link in the description and be sure to subscribe to Raoul Pal's The Journeyman channel. If you enjoy finance content and want to stay updated with the latest trends, consider subscribing to this channel and liking the video. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.